Welcome back to this week's market update. Today is Monday, February 24th, 2025, and with that, we'll jump right in. Looking at last week's market performance, stocks cooled off as investors focused on weak guidance from Walmart as well as growing concerns about a potential slowdown ahead. The Dow Jones Industrial Average as well as the Nasdaq Composite both fell about 2.5% on the week last week, followed by the S&P 500, which was down 1.66% last week. Bonds, on the other hand, had a better week, up 0.33% in the Barclays Aggregate Bond Index as investors moved into risk-off assets. Shifting gears into last week's economic data, we got the leading economic index from the Conference Board, and here you can see the 6-month growth rate in the LEI here. In January, we saw the LEI decline by 0.3%, continuing the downward trend since 2022, but we have broken out of that recessionary signal here. So you can see it is still below zero on a 6-month growth rate basis there, but we have been moving in a positive direction for over a year now. So LEI is improving, although it is still a bearish signal. And in the next slide, we'll take a look at what's driving these indicators. Within the LEI, it's really important to understand and see what's going on with the underlying components of these leading indicators. So all of these are a mixture of financial and non-financial leading economic indicators here. So you can see things that contributed negatively included average weekly manufacturing hours in the month of January. That was the most negative contributor there, as well as average consumer expectations for business conditions in the month of January. That was also a pretty negative indicator there. And then on the positive side, there's nothing too positive here when it comes to just the month data here. You can see there's a lot more variation in the 6-month data, but we do see the interest rate spread, the inverted yield curve that's been improving, as well as weekly initial unemployment claims. So a mixture of indicators here, but it is important to see how the manufacturing hours and consumer expectations were some of the drivers of the negative movement in January. Moving along in our week here, we also got the existing home sales data for the month of January. It showed that homes were sold at a seasonally adjusted annual rate of 4.08 million in the month of January here, which was a decline of 4.9% from December, but was up 2% in volume compared to January of 2024. The median price of a home sold in the month of January reached $396,900, which was an increase of almost 5% from a year ago. It was also the new record high median sales price for the month of January. So we are still seeing some softness in the housing market with prices being high and interest rates being high, although prices seem to be holding up steady, which is an indicator of solid demand backing the market. Last but not least, we saw inventory continue to increase. It was 3 months in January of 2024. Now we're up to about 3.5 months worth in January 2025 here. So homes are sitting on the market slightly longer than they were a year ago. Another important factor from last week's market movements was the Walmart guidance. Walmart reported fourth quarter earnings last week, surpassing estimates on both the top and bottom lines. However, the earnings beat was overshadowed by negative forward guidance as the company announced that its profit growth would slow in the year ahead. They also mentioned that tariffs were not factored into this softer than expected guidance, meaning that if tariffs were to become a serious issue in their supply chain, driving up costs, this could be another headwind for the company. So why is this important? Well, Walmart is the country's largest grocery store, often seen as a barometer of consumer health. So when we get softer than expected forward guidance from Walmart, it is pretty notable. And here you can see the stock price last week was down as much as 10% on this news that the forward year ahead would be a bit softer. Last but not least, panning out to fourth quarter earnings as a whole across the S&P 500. Despite that weaker than expected guidance from Walmart, it has been a very strong earnings season. Of the companies that have reported, about 90% of the S&P, they have shown about 16.7% earnings growth. The remaining 10% is expected to post about 24% earnings growth, which would lead the actual earnings growth to be close to 18% across the S&P 500, depending on these remaining 10% of companies that haven't reported yet. Overall, very strong. You can see sectors like financials having a really strong quarter, communication services also having a strong quarter, consumer discretionary, and near cyclical. So, very interesting mix. Many of these are risk on sectors. They're not necessarily, the healthcare, consumer staples, utilities. They're doing well. However, this does not look like a recessionary earnings season. So that is a good sign when we're looking at economic indicators as a whole. Has been really strong corporate earnings in recent quarters. So with that, we thank you so much for tuning in to this week's market update. We look forward to providing another update to you very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.